Good morning. Welcome, Angelo del Duca, angel investor, and I would say a big moving part in this entire ecosystem of what's going on in the Ontario. Thank you for joining us today.
Well, thank you for having me, Jeffrey, and thank you for the kind words. It's always a pleasure engaging with you, OPN, and the entire ecosystem. So thanks once again.
Oh, you bet. So we've now been working our way through. This is our, I believe this is now our fourth interview, and they've been going quite well. We've been keeping them nicely streamlined and getting lots of great insights from investors in the market. So maybe just give us a little bit about yourself before we do jump into the questions.
All right. So I have lots of gray hair. So I've been in industry for around 30 years. So maybe I'm exposing too much about how old I am. Did my own startup early in my career. And prior to the startup, worked at U of T in the microelectronics space. Did my startup again in the microelectronics space, exited, and then decided to give back to the community and joined the National Research Council IRAP program, became a director there, led a team of approximately 18 advisors, and decided to do an early retirement. It's now coming up to the 4th year, 4 years ago, because I wanted to get back to my roots, which is engaging with the startup community and actually becoming an active investor. So since then, I've been a part of the York Angel Investors, was Angel of the Year in 2017-18, I believe it was. And I'm also a member of Maple Leaf Angels, Spark Angels, join in with Kuretsu. So I get around within the whole angel community, and have not regretted a single day since I did my early retirement. And I have to say, I'm probably 10 times busier now than I was when I was at IRAP, and enjoy it. One of the items in that whole investment community is I had the pleasure of joining and being a part of the OPN Supporters Fund, and work very closely on trying to identify great opportunities that have the potential for success.
Awesome. Well said, and you have an awesome background and lots there for us to dig into. So why don't we start off with the first question? Why do you invest in startup companies?
The main reason that I invest in companies, and I have a fairly large portfolio, and like a lot of us investors, we always try and identify all of the successes. We sort of downplay some of the not so successful, but really my main motivator, beyond the opportunity of yielding a return on my investment, it's really about an opportunity where I can create a change and have an impact on the growth of the company. So I like to invest in companies where I see the potential of growth, both in revenues and in people. I feel that if I establish a good rapport and relationship with the entrepreneurs, that I can probably and hopefully bring some value to the table to help them overcome some issues or challenges that are preventing them from growing. So I look at those opportunities, and if I see a good, strong business case, and some areas where entrepreneurs need some help. If I can do it, great. If not, I can reach out into my ecosystem and also bring in specific resources to help them. So it's really being active as opposed to a passive investor. And if I can accomplish that, it actually gets back to my my driver, my passion, which is helping that tech-based startup community grow, because I see that piece of the marketplace, the tech startups, being critical for the strength of the economy and also job creation.
Oh, that's awesome, and we align on so many different areas there as well. And you're right, helping those companies overcome obstacles or stuck in a growth pattern, they're not able to move ahead. So being able to explore those different ideas and concepts with them, strategize and move it forward, I think is a great way to kind of help these startups, and it's a great mindset on why to invest. You talked a little bit about what you were doing at IRAP. What was the driving force that got you set up and starting to invest in startups?
So it actually was very similar in nature. So I can't speak enough about how amazing the program is. It's well, one of the oldest programs that are out there, and like all of us in the investment community, the program itself changes just as the mindset of the investors has changed over the years. And that's natural because a program and investor are very similar in nature. They're looking at creating the greatest impact. So when I was at IRAP, I always motivated my approval of projects with specific companies around the methodology of, does this have the potential to create wealth for the country and also create employment for the country? And so the return on investment may be viewed as slightly different, but when you dig deep down, it's actually the same thing, right? Because if companies can demonstrate that they're increasing their sales and increase employment, then they have a greater chance of contributing to the country vis-a-vis paying taxes, and from an investor point of view, providing a return on the investment. So both are amazingly in alignment. And at IRAP, I was able to go into companies and actually get them to open up their kimono to identify where we can help, right? And it's amazing how the strength of the program enabled me to accomplish that. Similarly, companies are always on a mission to be able to gain enough capital to be able to execute on their vision. And you're a part of it too, Jeffrey, and you see it. When we sit down with an entrepreneur, we want them to really put everything on the table, the good, the bad, the ugly, and then identify how we can change those bad and ugly all into good, right? And if we can accomplish that, I think we've done our job for the day. And putting aside the global altruistic aspects of doing that, there's also, if we can accomplish that, we also can hopefully increase the potential of yielding a return on investment so that everyone wins, right? And so that I use the same drivers as to why would I support certain companies at IRAP as I do in the investment community. I also saw from IRAP, having gone through a significant number of projects and proposals, I probably have a really good handle on not necessarily the key factors for success, but probably a good insight on what are the factors for failure. And if we can overcome those factors, then the likelihood of success is dramatically increased.
No, for sure. It's a two-sided coin, right? There's always one way or the other of the direction to go. But if you spend enough time in the space, you start to be able to see different things on both sides and figure out how to align those to go forward. So having that experience from IRAP and carrying that into the Angel Network is fantastic. So inside of that, what becomes your favorite part of investing?
Actually, doing a deep dive into the company. I relish the opportunity of being an active participant, and in a lot of situations, taking the lead on doing the due diligence that's required to really make that determination. I've been fortunate that colleagues actually respect some of my perspectives on a company after having done a deep dive with them, and actually use me to a certain degree of mitigating their risk as to whether I'm in alignment with their thinking. Ultimately, all the investors have their own methodology and triggers for doing an investment. But to me, being very active in determining what stage the company is at, what are the risks associated with it, and how those risks can be mitigated and avoided. And I look at that aspect as being the most critical factor of why I enjoy doing what I do.
No, that's fantastic. And I'm a big fan of the data and the dive in, so I appreciate all of that. And I think that it carries a big value for one on your side in building a relationship with the CEO or the startup company, which is very helpful. But like you said, it really allows you to align their principles along with the other investors. And that gets people a lot more comfortable and helps de-risk that business opportunity for sure. When you're looking at investments, is there a set criteria of the amount of companies you look to invest in per year?
Not necessarily. So one can look at it from two perspectives, right? When I look at the number of investments, one can utilize, I'm going to set aside a block of money, and with that block of money, I'm going to allocate chunks of it into many companies, right? Individually. And I do that to a certain degree. But what I've also done is been a part of funds where I put one chunk of money in, and then it leads into investment of many companies. And so my investment in and participation in the supporters fund is a good example of that. My contribution to that fund is not only going towards one company, but rather many companies. And the rationale for all of that boils down to one factor. Make sure that I have a diversified portfolio. I don't like to, some investors will only invest in a particular vertical, right? Whether it's medtech, whether it's SaaS-based technologies. I like to spread it out over many segments and have my money dispersed over a larger number of companies. And then it's essentially playing a game of, with a larger number of companies that I'm involved in, the opportunity for one or more clicking in terms of rapid growth is dramatically increased. And as you're aware, probably in investing in 10 companies, 8 will either fail or be in the struggling area, and then there are the 2 that really start to succeed, and possibly 1 that really explodes. So spreading it out over a large group of companies is key, with the understanding of it's risky, right? And the key would be looking at each investment from the perspective that a particular company is going to be that 1 in 10 that really explodes, right? And that's a real theory. And if we can accomplish that at a much higher percentage, then everyone wins, right? So that's my methodology and approach to investment as to why I invest in particular companies and why I like to spread it out. And as an example, I don't have an investment currently in a real dedicated life science based company. So I'm actively seeking the right opportunity to invest in that. So I look at it from the point of view of what's missing in my portfolio, what companies are in that area, and which ones have the potential of growth, and where can I provide value.
No, that's great. And I like your philosophy 100%. We align with that. And you're right, there's diversifying, and then there's finding the right mix of companies that you can invest in. It kind of talks to our next question, which was on the vertical side. If there was a specific vertical, and as you mentioned, you don't really tie things into a specific vertical. You're looking at the business opportunity and the people that are running that company and going forward with that. So very agnostic to market, which is fantastic. So when you start to go through your due diligence, is there any requirements that you look for before you make a commitment? Is there anything that's really set in stone they got to have or you're out?
I really like to hone in a few areas that I think are really important. The big one is, what's the market opportunity? So trying to gauge how fast can the company grow over a period of time. So at the very least, I expect 3 years projections of their revenue, with the understanding projections are just that, projections. And they're probably valid up until the time you say print or save that Excel file. What's really important in that is looking at the logic and the assumptions that were used to come up with those projections. So I look at that thought process of, well, how did they see the market? How are they planning to capture that market? How do they differentiate themselves from everyone else in the marketplace? I don't like the well, I don't like to use blanket statements, but I do get concerned when a company says, I'm the only one in this space and there's no one else. And one could look at it from 2 perspectives. One being, that's great, you're just creating something new in the entire business world. But you may also take a look at it. Maybe the reason why there's no one else in that space is because there isn't a market opportunity. So describe to me why you feel so strong that this is a real opportunity. And then I look at how can I bring value to the opportunity or investors in general? What's missing in the company in terms of capability and resources? And how will the investment really be able to address those missing pieces? And one last thing that I look for, that I've started using recently in my DD sessions, and I have to acknowledge it was a colleague of mine that we were doing a joint due diligence, and it's actually a real thought-provoking question. And what the question that I asked the company is, assume that as a company, you're dead in 24 months. what were the reasons that caused the death of the company? And what are you planning to do to overcome that or prevent that situation from occurring? And inevitably, every company that I've asked that question recently, they're going, wow, that's an interesting question. Let me think about that because that's important. So those are the elements that I look for in the due diligence. But most importantly, are the people the right team, right? Are they the phrase that's overused, I think, is coachable. I like to think of is the team really focused on growing the company, and how do they fit together? There have been a couple of situations where the founders, after a year, are at loggerheads with each other, which is not that unusual, right? Because the startup community is not for the faint of heart, right? And I like to see founders that can put differences aside and concentrate on the growth strategy of the company.
No, that's fantastic. So there's some good nuggets there on the marketing opportunity side, sales side, figuring out how you're going to grow your business, and how you're going to, put some numbers down, give it a target, and go after it. And then, of course, having a strong team makes a big difference. And there are two sides to the coin. There's the paperwork and what you're shooting for, and then on the other side, there's the people and how the CEO and all of them are going to click to drive that business. So they are two different fundamentals that really support that startup and growth. Is there a time frame that you have on an investment that you try to make sure that you can help close in?
So timing. So there's two timing areas, and if I really look at look at it from the two different perspectives, right? The first perspective is how fast can you come to a decision in terms of an investment, right? And it really is dependent on each opportunity as to how quickly can we address all of the aspects within the deep dive and due diligence on the opportunity, the team, all of those factors, right? And if it's all in place, there's no reason why one couldn't come to a decision very quickly. Let's say within a month, right? But in other situations, there may be missing factors in the makeup, which would require having the company and or myself and my colleagues come up with some alternatives where we see limitations, and that may take time, right? So providing a linkage to a key player in the space that they're going in, looking at potentially providing a connection and a partnership with others that jointly benefit both of them. That may take time, but realistically, at the long end, I'd like to see things definitely within a 3-month period to go through that whole process, get not only the company in alignment with the investors, but also getting the investors in alignment with the company too. It is a dance, right? And you need two to dance. And sometimes there is some limitations on one end, but there are also limitations on the other end. Having said all of that, once that's undertaken and an investment is executed, I look at being able to assess a company where within a 3 to 5 year period, they're going to be returning an investment to my my injection of funds. And I've had a couple that actually have yielded exits within a 2 year period. So I've been fortunate. But again, as I mentioned on the at the outset of our discussion, we always like to talk about the hits and the winners, right? But there's still quite a few there that are still working and diligently trying to yield that return on investment. Because if they bring me an investment, they're clearly bringing a value to their company and the founders themselves.
For sure. So there's it sounds like there's always going to be a bit of time. So it could be a month, but it's going to extenuate as long as it takes to get through all of the due diligence and the questions and the shift and the change that everybody brings to the table, which is a good thing. Is there, when you're making investments, do you do and save back money for follow-up investments?
The one thing that I'm almost religious on requiring from an investment, one aspect, and Jeffrey, you and I are very much aligned in this, having participated with you on several investments, and that's the opportunity for warrants. That essentially what I like to accomplish in an investment, having a set milestone that is mutually agreed between the investors and the company, that indicates if you can achieve this growth within this period of time, I will put in more money at the original valuation. And it is actually a wonderful tool because it sets goals and expectations from both parties. Being an engineer, I like to see objectives and goals, right? And I think that not only exists within the technical space, but also within the business space, right? It's not sufficient to sort of say, I'm going to grow. What probably is much more quantifiable within this period, my growth, both in revenues and people, will be at this particular stage. And if you accomplish that, well, I'm going to help you more by providing you with more money. And I also like the opportunity, and in certain situations where that warrant option would exist not only for the investors, but also for the entrepreneurs themselves. So if they sign up, they too can inject more money, i.e. gain more equity or maintain their equity position in the company. These are all benefits to both sides, right? With the goal of being driven by success.
Yeah, no, that's great, and 100% support that. I'm a huge fan of that, and I think it also aligns for if it's done right and it's in 6 to 8 months, not 3 years away, the value comes for being able to do that bridge round to get them to that next level. So there's always being strategic ways to input that dollar to help them grow. You mentioned a few other things around different ways that you can help startups outside of just financing. Is there anything that you look at that you really hone in on when you are helping outside of finance, from advising and other aspects? Is there something that you can describe that you bring to the table that really will help a startup?
So I look at, in terms of what I can bring to the table besides the money, right? I guess from in the investment community, and also from the startup community, it's not just about the money, it's about getting smart money, right? And I use the term smart money as what can an individual bring to the table that's beyond their physical investment in the company. So what I look at is opportunities where I can leverage my knowledge of the whole funding program landscape that exists. Are there programs that are specific and well suited to helping the company? And typically, these funding programs are non-dilutive, so the company can get money without giving up any equity in their company, right? And I can help them manage their journey through that process, because that journey may not necessarily be that simple, right? And having a better understanding of what the mindset is from the program perspective, entrepreneurs have a better basis to know how to effectively move through that process. And then there are specific programs that are initiated depending on market conditions. And we look at COVID-19 right now. There are substantial programs that are available that I encourage all companies to explore to see how they can leverage those opportunities to further advance their capability. In addition to programs, there's also, are there subject matter experts, either technology-based or business-based, that can be brought into the fold during the pre and post investment stage with the company. So is there someone or some organization out there that really provides a particular skill set that can propel the growth? A good example could be, is there a company that is well positioned from an SEO perspective? And if a company is a direct-to-consumer business model, how can SEO, be utilized to further expand their user base and increase their revenues, their traction, their exposure, all of those elements. So it's on not only on the funding side, but also from my sort of connections within the business community and technology community on who can really assist.
So that's a good roundup of a bunch of different things that you can really bring into that startup. Again, outside of the financial side, I think those are all great ways to help open the company up, especially in an early stage company. When you're in a pre-seed and a seed round, they really do tend to look for a lot more hands to help, and being able to come in and explore, offering expertise in how to raise other non-dilutive funding, to being able to help them with experts that can help them really drive into a new vertical, or at least align their vertical. All great things that they're going to need at the base as they start to climb that mountain. So that's some fantastic advice. Is there, since all of this COVID has started happening, markets have been changing, has there been any change or pullback on the types of investments that you're looking at, or other angels in your space?
I've done several, well, not several, but around 4 or 5 opportunities that have gone through to complete investment. And I do have to say that there are some investors that have been looking deep in their portfolio to see whether they're going to do any further investment at this particular stage in light of the markets and its effect from the COVID-19 crisis that we're in. So yes, I have seen an impact on that side, but I do have to say it's a smaller percentage than I had anticipated. Okay, I think that regardless of the economic environment that we're in, a good opportunity is still a good opportunity, right? and investors will jump in on a good opportunity. They may not jump in at the same degree or same level that they normally would, but if there is a good opportunity for an investor, they'll find a way of being a part of that opportunity and looking at investing. On the other side, I've had the startups themselves being affected by COVID, but I've also been pleasantly surprised that one opportunity, for example, where I did a DD yesterday, and I had assumed before the DD session that this company was going to be struggling with the COVID situation. And in fact, the entrepreneur, as at the early onset of the crisis, was really worried and concerned. Lo and behold, they just identified that April was their strongest April ever, and it was it's a SaaS-based technology, and we both concluded, yes, with this situation with that everyone is in self-isolation and bunkered down, that people actually have a little bit more time to research what things are available, and saw their offering as to be much more attractive. So there have been examples where actually the crisis has, and I hate to use the term because COVID is completely tragic, but from a business point of view, there has been some positive aspects associated with having more people being able to take advantage of some of the offerings that companies are offering.
For sure. So there is a bit of a shift because of it, but at the same time, things have come down a little bit. Things have slowed in all sectors, but at the end of the day, there's always going to be problems that need to be solved, and startups have to pivot, and they have to do the things that will allow them to align and make success. So we've kind of gone through this life cycle from, coming from why you invest to going through DD and learning more about the company and getting really associated with the startups, making an investment, finding intrinsic ways to help them grow and build. So now that you've kind of structured all this, is there an underlying piece of, I need to be updated regularly? How do you install, and what is the method that you look for when companies, you're looking for feedback after an investment? Is there a form of communication you like, or ways that you support them outside of this as you move forward?
So in terms of maintaining that gauge of how a company is performing during the post-investment stage, there is the mechanical one that is always embedded in an investment to some degree, which is I need to see a status report every quarter. I don't want to inundate my invested companies with focusing on doing paperwork to such a degree that it deflects them from what they're supposed to be doing, which is succeeding. Having said that, every quarter seems to be a reasonable approach to give me an update, tell me the major accomplishments during the past 3 months. What obstacles are you seeing? What changes have occurred in the marketplace? And do you have to, as you appropriately described, Jeffrey, do I have to pivot? Do I have to look at new opportunities or new ways of doing business? So I try and get those as quickly, as regularly as possible every quarter. And I do like to sort of follow up. And if there is something there that I see, engage with the entrepreneurs and sit down, being respectful of not trying to divert their attention. The one thing that we are all passionate, right? Both the entrepreneurs and the investors, right? The key is to have a dialogue, a fruitful dialogue, and I don't have necessarily all the answers. And possibly, if I turn around and suggest, you need to do this, and then the next person comes in and says, well, wait a minute, you should actually be doing this, which is where they were initially, right? I want to avoid confusing the entrepreneur and having them zigzagging when they should actually be going forward. And that's why it's critical to have an engaged dialogue with them on what makes sense. And it should be a mutually agreed approach as opposed to one-sided, right?
Agreed.
So, active engagement is critical.
No, that's wholeheartedly agree with that. Being able to keep everybody active and aware helps solve new problems that come up. And, you know, that I think is really beneficial. While you're going through this, and I know that in the past it's been pretty prevalent, but do you look at taking board seats and participating on that side, or do you rather be an advisor or just quarterly updates? Is there a piece that you really find that you fit in best with?
Yeah, I really, in terms of active participation with the company, in my investments, I try where it makes sense, right? Try to be either on an advisory board or ideally on the board of directors, right? And if York Angels, for example, is leading an investment, the term sheet that I generate through York Angels actually has that as a requirement, that there would be one board seat allocated to the investors. It may be myself in one situation, or it may be another individual in another situation. So it's whatever it brings the greatest value. I think that having a seat for the sake of having a seat shouldn't be the driver, right? The driver should be really about, can I bring value? Do the entrepreneurs see value? And then how can I be a part of that? And the one thing that we have to keep in mind is once on the board, the role of a board member is really all about the having the fiducial responsibility in the best interest of the company, right? It now makes it really formal, right? And having that commitment as a participating board member brings a lot from the perspective of focusing on success of the company.
No, that's great. And you're right. It ties you in nicely with that business. And again, that opens up the lines of communication and ways that you can help. And I know that a lot of companies will structure these either quarterly updates or monthly at the beginning, just to kind of help things move forward faster. And again, you become a Rolodex to that company, because from the responsibility that you bring as an advisor, you also want to make sure that you're doing everything possible to help that company grow and in the right directions and solve problems. So that's great that you've got the opportunity to be in that position. So we've got two last questions that I'm going to ask you. The first one, so from all the previous investments that you've done, everything that you've done at IRAP, you mentioned already earlier on in the discussion that, you know, you see a lot of the good things that companies do, but you also see a lot of the bad things, and you can figure out kind of, is this company going to be successful, because you've seen right at the onset some of the maybe bad things that they're looking at doing, and you can make that choice that this company might not be a fit to move forward, which is great. So can you round up all of that kind of information you have and give maybe one or two sound bites to what you find will help a startup get off the ground and move quickly and be successful?
Some of the key factors I think that really drive success in companies are really led by the key management of the organization. So the founders, especially in early stage startup companies, it's not going to be a large, well-established team that you would normally find in an existing mature company, right? And so invariably, entrepreneurs will have many, many hats. And when they wear many hats, they're stretched thin. So I look at one of the key factors as being the flexibility and openness to look at alternatives. And sometimes that may mean taking one or two of those hats off and delegating to the appropriate resource. Because as a founder and an entrepreneur, we always have this natural tendency, right, to have our finger in everything. Sometimes removing our finger in certain areas and delegating it to someone that is very focused in that area creates a real opportunity for success. So being able to identify where one's strengths and weaknesses are is a real key factor. And I look at that when I sit down with founders and entrepreneurs. Do they have that ability, right? If they have that ability of being able to identify where opportunities are, where they can play the greatest role in, they have the potential of greater success. That also extends into not only from an activity based, but also from a business and market direction. Entrepreneurs that are really fixed in their view and don't respond to changes that exist in the marketplace are destined to plateau and not necessarily continue that growth trajectory, right? So keeping an intimate gauge of how the market is changing, adapting in the area that they're in is a key factor. So when I look at entrepreneurs, their knowledge of the marketplace, how their solutions play a role in that marketplace, how those solutions have to change as the marketplaces change, that's critical. So I look at that trait also. How well versed are they in the marketplace that they're identifying? And look at it not only from the perspective of this is a current solution to a well-defined problem in the marketplace, but if it isn't a sustainable long-term solution, then the company may implode within a fairly short period of time, even though they can enjoy a momentary spike in growth, but you want to avoid that spike from becoming an impulse and then coming right back down again, right? So you always want to ensure that that trajectory is always on the uptick and not leveling off or coming down.
That's some great advice. You're, I really enjoy the fact that you put a lot of onus on the CEO to understand the market, but then also as they start to grow, push out a lot of the things that they're working on and find the experts that can support them so they can really shift their focus on hitting that market again and how they can start to grow inside of it. And I think that that is 100% a good way of looking at good CEOs versus ones that want to hold on and do everything and forget that there's got to be a growth pattern and you can't do everything.
Right.
So the last question that I have, and we've got a couple minutes, so we'll have to be quick on this last one. But so based on everything that's going on in the environment right now in North America, early stage investing, where do you see the next 12 months going? And then where are you predicting we're going to be in 3 years? So is there a category or vertical, a space that's really going to blow up and really everybody's going to dive into over the next 12 months? And then what do you see in the next 3 years? And once we get these sound bites out, I'm going to hold you to it. So make sure it's good, because I got to find everything you're saying.
Well, now you're asking me to put the crystal ball in front of me and identify both near term and long term in terms of where things are going to be going. That is a really difficult question, right? Having said that, near term, I look at opportunities, and I'm actually helping out some colleagues in this area. It's actually not only near term, but also long term. And it's in response to the current crisis that we're in COVID. So if we can, as a country, remove our reliance on foreign sources for particular solutions in the PPE space, it removes that reliance and dependency externally. That's one area that is a real opportunity right now. But more importantly, it also accomplishes something else. And the other thing that it accomplishes is establishing a stronger manufacturing capability locally. I think that the current crisis that we're in, it's actually identified some real challenges that currently exist that we have fallen into because we've lost that capability and resource to be able to do things locally while still focusing on a global perspective. So if we're reliant on external sources for a large percentages of the things that we need, whether it be food, medical devices, all of those aspects, to a large degree externally, it raises a huge risk for the country. And when I say raises a huge risk for the country, that turns into investment opportunities too, right? Because if we're all struggling with those situations, then the economy will suffer. And if the economy suffers, then investments suffer. And it has that whole chain reaction throughout the whole ecosystem, both to investors, entrepreneurs, and companies, right? When I look back at what had happened in Ontario in the late 90s, I had indicated to one of my colleagues at one point that, the biggest challenge I see for Ontario is that for the longest time, we relied on the strength of a really weak dollar, and that's why we were so successful in manufacturing, and we didn't innovate. Well, lo and behold, in the late 90s to 2000, if you remember, the Canadian dollar flipped, where it was much stronger than the US. Well, all of a sudden, the manufacturing sector collapsed because it was driven by a weak dollar as opposed to a strong solution. And we sat on our laurels of not innovating, right? So I still see advanced manufacturing as being a key area where we can sort of really look at great returns and strength for the country. And that may actually, this crisis may actually fuel that sector and ensure that we not only have the strength from our dollar, but more importantly, from the way we provide the products and the services.
No, that's a fantastic view. And I know that there's been a few discussions that have come out from the United States and around the world where people are starting to say, hey, maybe we should be insourcing development and services because we're putting ourselves in a tough position that we're not able to get products that we want or quality of products that we need. We're too reliant on foreign, but at the same time, we're also looking at foreign investments. So there's a big moving ship that kind of has to really refine itself down and figure out what Canada wants to be. And I know in the late 60s, and the architect that designed this is totally going to elude me his name, but there were two people that were paid by the Canadian government to say, where does Canada want to be long term? And they wrote up this fantastic document that stated that, you know what, Canada is going to be the world's think tank, and we're going to put together everything around how to do things. But we're not going to manufacture or do anything in Canada. We're going to be the brain power that feeds the rest of the world. Well, they succeeded in making that happen, and Canada is well known and brought into that space. But now you're stuck at a position where now you've outsourced everything, where the brain power is all in Canada, and we're helping that way. But now we're at a lack because we can't actually manufacture and do all of these great things that we need to be self-sufficient. So I think there is going to be a good change of pace, and that will drive out the future in the next 3 years as well. So that's awesome. Well, in saying that, Angelo, I would, as always, I'm a big fan of everything you do, and I'm glad that you were able to join us today. And we'll continue to keep doing the great push in the early stage sector. And I appreciate all of your time today. Thank you very much again. Give me 2 seconds. We're going to do a nice little picture or whatever at the end. I haven't done this yet because I keep forgetting. But again, thank you. Your insights were fantastic, and we'll let you know when everything gets posted. It will be in the foreseeable future. In the next couple of weeks, we'll start pushing out sound bites. But thank you again for all of the insight.
Well, thank you so much, Jeffrey, and I really look forward to it, as always.
Awesome.